So why are we learning technical chart, or why are we learning technical analysis? Why are we doing all of this? The reason is so that we can learn how to buy and sell. That's the reason why we're learning all of this. We're learning how to know the place to buy and the place to sell in the market. So this is the reason we do analysis. So then there are things you'll see that you know that the market will buy, market will sell. I'll teach you some of them. So what I want to say next is, how do you know where the market is going to go? There are things you see, you'll be like, the market is likely to go this side. Number one is liquidity, which I've taught you yesterday. Liquidity, and I will still explain further. Then number two, imbalance. Number three, fair value gap. So these are the three things you will put in mind when you want to determine which side the market is likely to go. You know that even though yesterday I already shown to you that when you see a structure like this, then you should wait for it, then you sell here. Even though I already showed you that, and we saw it yesterday on the 1 hour, yet I did not sell, but I bought instead. And I told you that I was seeing many things, and I think that it's likely going to buy. You still remember? So
yes, sir.
Okay, so it was because I told you I saw all this liquidity above. This is what we call liquidity. The market at the top here, all these wicks you are seeing, they are money that needs to be reclaimed or that needs to be taken out. So all this money that are above these wicks, the market is likely to draw to that side. So, and I saw that quite all right. It has broken this high. It has broken this high. So it came here. So, but it has not gotten to this one. Neither has it reached this one. So those liquidity that was here, it took it out. So, but there are other higher ones above, which it will likely go to. So when I checked at the H4, which is the 4-hour time frame, I preferred that let me buy this trade because of this liquidity that is above. And I took profit from this trade yesterday. I sent it to your WhatsApp, right? You saw it now. So let me put the trade history. I don't know why this is taking time to load. Okay. So this was where I entered the trade. This place where there is blue something. Are you seeing this place? That's where I entered. So then I bought it to this place. So it was $4 I got. When it got here, I closed the market here. You getting me? So I closed it at $4. So that was what I did yesterday. Now, it's not as if the market cannot continue going back up. It can, but I just felt like I've taken enough profit. Let me leave before it turns back because of this, because of what is here. So the market respected my bias of buying. Why? Because this is liquidity above. Are you getting me now? So that is how you know the area the market is likely to draw to.
Yes.
The area is likely to go. Then secondly, imbalance. Imbalance, I want to, okay, let me just use this particular area of the chart. Are you seeing this area of this chart? Or let me use this, let me just use this one. When the market creates a bullish candle, it's supposed to create a red one in between, either after it or second after it, but it just started creating. This move is big, it's massive, all the way from here to this place. There's no bearish candle in between at all. This type of place, is a place market will trade back to. So the market is likely to come back to that kind of a place. So this market will still likely in the future, either now or later, still come down this way. So once you notice imbalances in a trade, you know the areas the market is likely to draw to. Are you getting me now? So
yes, sir.
That's another thing. So this market can sell because of imbalances at the bottom. So, but we're not just going to sell instantly. No. There are things we are still going to look at for. Number one, you have seen that the market have taken out liquidity here. Took out liquidity here.
Yes.
Then it came here. They didn't take this on out, but this is like a double top already. Then it created this inverted hammer. After the inverted hammer was created, you can decide to sell because it has taken liquidity here. It even took out another one here. Then it came back to a high, a previous high, which is a supply zone. Are you getting me? So there you now see this inverted hammer, which is also a rejection block. You can decide to sell it all the way from that place all the way to this side, because this is where the market is likely going to draw to. All this area where there's liquidity, the market is going to come back to cover it. This area. This area, market will come back. So it will come to close up all this area. So it will come back here around this place. The market will sell to this place. Now, why do you believe it will sell there? You see an imbalance here. You also see liquidity here. This area, this is also liquidity. Are you seeing it? So there's liquidity in that area too.
Yes, sir.
So now, if let's assume you could not join this sell, like me now, I missed it. I could not join it here. Let's assume I could not sell. So the next thing you will do is to wait for what I explained to you yesterday to happen. So you go to, either you wait on this time frame,
for the market.
Either you go to a lower time frame, or you can still wait in this same time frame. You draw this block here like this. So your own now is to wait for this market to break it downwards and get back. So this is where you now join the sell. So when you want to sell it, you now sell it to this side. Are you seeing it now? So your stop loss will be here. So that is how you trade, with the concept of liquidity imbalance. So you know that you can enter a trade with this pattern I just drew now. You can enter a trade like this. You can also enter a trade with this particular pattern, this one, which is the either bearish engulfing or inverted hammer. You can enter through with that one. So now you'll be looking at things, a supply zone, demand zone. This is the supply zone. So this thing was created at a supply zone. Then you are now going to sell. Now I missed it. I was not there when it happened. So what's the next thing for me? I'll wait for the market to create this other mitigation block I taught you yesterday. And then actually this will not be a breaker, because this block sent market above a high, a structure, so it broke a structure when it was going up. So this will not be a breaker, not a mitigation block. You understand? So now once the market comes down like this and is returning back, this is where you now join it down. So you can decide to sell to this level or this level. So whichever one you are tired of holding the market, you can now decide on your own. I want to leave at this point, or I want to. You are the one that determines your take profit. Take profit is not a must. You can decide to leave anytime. You can take your profit anytime you like. So that is how you use liquidity and imbalance to know the side the market is likely going to draw to. Now the last thing I mentioned is fair value gap. Now normally when the market is moving, it goes up, for example, comes down, then goes up. When it is coming down, it's supposed to touch here. It's supposed to touch the high of the previous candle. So it's supposed to come down here. Let me show to you what I just said. This market, now look at this area of imbalance. Look at this market. Market moved up, right? Moved up.
Yes, sir.
So then the next candle supposed to touch this area. Supposed to touch this next candle now. This next candle. The low of it was supposed to come down. It was supposed to come down here in this manner and touch that place, but it did not. Instead, after this one closed, it left a gap here. It left a gap in between this first candle left a gap in between this first bullish candle and this third one. So you can see there's a gap. The low of this candle did not touch the high of this candle. There's a gap. The same thing also happened afterwards. The next candle that formed, the low of it also left a gap. So let me draw the first gap. This is the first gap. This is the second gap. This is the third gap. This is the fourth gap. Now there's not so much gap in this one. There was gap here before. So you cannot see the market has to come back to close the gap to touch. You can see the market came back to touch. It did not really touch it exactly sharp. Supposed to touch it. Are you getting me? So when the market moves properly, oh god, let me use this other side. You will see what I'm saying now clearer. Look at this place. Are you seeing that the high of this red candle is almost touching the low of this one? So they must overlap like that. Now when they did not overlap, when they leave a gap like this type I just drew here now, like in this case too, there's a gap here. Oh, why am I using the wrong tools? There is also a gap here. Okay, so in the whole of this move, this is the only gap. There's another gap here. There's no gap here. There's no gap in all these ones, but there's a gap here. There's a gap here. The areas where the gaps are, market is likely going to come to those places. So you use the fair value gap to know where market will still draw to. So the fair value gap and imbalance, they look alike, but they are not the same. The imbalance is where no opposite candle occur at all. Like the market just moves straight. That's an imbalance. Okay. So, but for the fair value gap, there might be opposite candles or not. The thing is, the low of the third candle is not touching the high of the first candle. Once you see that kind of scenario, that's what you call an imbalance. That's what you call a fair value gap. So all these areas are areas the market will trace to. So there are fair value gaps in this move, there are imbalance in this move, and there's liquidity in this place. So this market is still likely going to sell when it breaks this block. So I'm going to patiently wait for this market to break this block, and move like this. Then I will sell. If this happens on this time frame I'm in now, it will definitely sell. Are you getting me? When I use the word definitely, that's because the probability of it selling is higher. Are you getting me? It's higher. So that is how you use fair value gap, imbalance, and liquidity to analyze a trade. But you enter a trade with either the order block, rejection block, breaker, mitigation, or you can actually still use the word double bullish engulfing, bearish engulfing, hammer, or inverted hammer. Those are the ones you use to enter. But you know where it will go by looking at liquidity, fair value gap, and imbalance. Then the last thing you also look at is the trend. Are you getting me? So you must also look at the trend. That is very, very important as well. I don't know whether you have any question, because I don't intend to do much tonight. This is basically everything that is remaining for me to teach you. So next week it will just be a recap and how far you have practiced. I told you to start practicing from this week. So start practicing everything you are learning. Let me ask if you have any question. Do you have any question?
I don't have any question for now, but I'll go through it over the weekend. And next week, I'm sure I'll have questions.
Okay. So you look at imbalance, you look at fair value gap, you look at liquidity for you to know the areas the market is not even going to draw to. I just mentioned them now. They look easy, but it take you time to really grab. Yes, it take you time to really grab. It's not every time you look at it at this your level now that you will see everything I'm seeing. Remember, I've spent enough years in this market. I've been trading since 2020. You understand? So it's easy for me, because just like somebody who has gone through secondary school, and then you now ask the person what is 1 + 1. If he cannot tell you, that person needs to be flogged. You understand me? Because he learned it many years ago. He has been using it every day. It has become part of his life. So he's able to know. If you ask a university student to recite ABCD to Z, he should be able to do it, because he has been doing it. He has been using them. Are you getting me? So that's how it is in trading. But when you are in primary school, you may fail, but that's the first time you are learning it, because you are young, you are new, you are not in the system for long. So when they set exam for you, you fail. It's possible. But now that you are big, if they set those exams for you, you can never fail them again, because you've already known them. So that's how these things are. You keep practicing and practicing until you will now begin to know this concept inside you, not like trying to remember a book you were taught, but they just become part of what you do when you open the chart. Are you getting me now? So there is imbalance, there's fair value gap, there's liquidity. If you have no proper understanding, watch the videos again. Then, like I said before, you can still go on YouTube and watch videos on each concept I have mentioned. That is how you learn more. Okay, it will actually make you have more questions. So you have to learn, keep going wide within the area I've taught you. I've taught you fair value gap, I've taught you imbalance, I've taught you liquidity, I've taught you order block, I've taught you mitigation block. I didn't really spend the whole week in teaching each of them. I'm just teaching them because we have a short period of time, like I'm doing a crash course for you. So the bulk of the work is going to be your practice, continual learning, and this will make you have questions. I sent you materials that time. Don't know whether you've read them. There are many anyway.
Yes.
But all those materials, I've read all of them. I've read over 90 books in 1 month when I was learning Forex. Over 90 books. That was in the month of December 2019 to January 2020. Over 90 books. So you need to read them. They will give you a lot of things in your heart, a lot of questions. So once you have those questions, I will now be more interactive. I will now be talking things that I have not said before. Then also I added you to my private group so that you can see what we are doing there. You know, I'm not the only one that is trading. I have people in that group who are trading as well. You saw that guy that was telling me that trader I should leave it to that it might sell. You saw that guy? So
yes.
And I laughed. So the thing is, the trade actually sold, but I had already left too, because I saw that today there was going to be a news called CPI. Oh, you don't know about that now because you're not doing Forex. So there's a news called CPI. So the CPI was going to be released today by 1 o'clock, and that's Nigerian time now. 1 o'clock Nigerian time. So when I saw the news, I just decided that I'll close all trades I was in. So when the market came, when the news was released, almost all the setups went wrong. So I would have taken loss on all of them. But since I left, I did not take any loss. Do you understand? So
yes, sir.
That's the way trading is. Sometimes you yourself cannot see everything. You need to be in the midst of other people. So their contribution matters. So that's why I added it to the group, so that you know that trading is something that is real, it is live. We're making money with it, the little we can. We are not millionaires like the ones that drive Lamborghini and the rest. But as long as we can see something to eat from there and live life, we are okay. You understand me? So it's something I want you to really put enough time to learn. So I did that one to encourage you. Everybody in that group are traders. So I told them I will not add anybody again, but I added you, and for free. So just use the privilege very well. Do you understand me? All right. So with this,
thank you,
sir. Come to the end of today's class. If you don't have any question, so in subsequent classes, it will just be review. So I'll be asking you, you'll be asking me. So I'll be showing you what you have not seen, and that will be all basically. All right. Thank you for joining. Please take time to watch the videos. Which I should encourage you. I'm trying to encourage.
I will.
All right.
Thank
allow
you, sir.
you to enjoy your movie. Okay.
Bye.